And we will circulate a copy of the recording and the slides by email next week. And we're also adding in a copy of the slides to the chat now. Chanel will do that for me. So I'm not expecting any fire alarms where I am, but please keep an ear out where you are. And just a reminder that this is a safe space. Please be respectful to one another when you're asking questions and in the chat as well. You can leave any comments or reflections on what you hear today in the chat, but please do use the Q&A function to add any questions. So that's found at the bottom of your screen on the toolbar. And you can also upvote any questions. So if you see a question from somebody else that you'd really like to hear the answer to as well, you can upvote that. And you'll also be able to see questions that have been answered. And that's it for housekeeping. If we move on to the next slide, please. So just a quick run through of our agenda today. So I'm heading up the welcome and introductions. My colleague at NCVO, one of our governance consultants, Aggie, is then going to talk to you about considering conversion before handing over to Philip from Withers, who's going to talk you through the practical and legal considerations of changing your organisation structure, before we've got plenty of time for Q&A and then just a bit of signposting before we close at 11:30. Next slide, please. So very briefly, for anyone who is unfamiliar with us, we are NCVO. That's the National Council for Voluntary Organisations. NCVO is the largest network in England for charities and volunteering. And we're very proud to represent and support over 17,000 members from across the country, from the very biggest household name charities to small and local community groups. But at their heart, like you, they all have the aim of making the world around them a better place. And we'd love you to join us. Next slide, please. So just a few insights into what you can get by becoming a member of NCVO. Essentially, you can save time and money. We exist to make things easier for you and make sure that you can provide a service to your beneficiaries. As a member, you get access to information and guidance, downloadable tools and resources, templates, discounted training, research, access to our trusted suppliers, and more. And just a reminder that membership is free for those with an income of under £30,000. Next slide, please. So, why are we here today and why have we chosen this topic? So, conversion or changing your legal structure is a hot topic on our small charity help desk, which is one of the things that my job role covers at NCVO. So many organisations set up very quickly during the pandemic. We've seen as well, or in the last few years, choosing to register often as a CIC, so a community interest company, or set up perhaps as an unincorporated charity for the sake of ease, perhaps, or speed. But now many may now realise that this structure doesn't suit their purpose, adequate funding isn't available, or perhaps this legal structure doesn't offer enough protection for trustees or prevents the charity from doing what it wants to do. So when we talk about conversion, what we mean simply by that is changing your legal structure. And that's what we're going to talk about today, as the title of the webinar states. It might be labelled as conversion, but in reality, what this means is a three-stage process, really, of setting up a new legal structure, transferring your assets, and closing the old legal structure. And there isn't a simple process for all structures, as my colleagues will talk about today, and it doesn't work for all structures. So today we'll be focusing specifically on the process of converting from a CIC, so a community interest company, to a CIO, a charitable incorporated organisation, and from an unincorporated charity structure to an incorporated structure. And more importantly, we'll focus on the questions you should be asking yourselves as a board before undertaking this process. So before I hand over to our presenters, we have a couple of poll questions that we'd love you to participate in to give us an idea of who's here today and why you have joined us today. So if you could launch the polls, please, Chanel. So the first question on the poll here is, what is your current legal structure? And if you don't see your legal structure on the list there, please choose other and share that with us in the chat. Brilliant. So if we can share those results. So can you see that, Phil and Aggie? So we've got an idea of who's in the room today. No societies. I'm not sure what the other is, but we can check in the chat for that. CICs and different types of charities here with us today. Okay, if we can launch the second poll question, please, Chanel. So why have you joined this webinar today? Quite a few different options there. We really want to know what stage you're at in this process. So please choose carefully. Just a few more people to participate. Okay, if we can share those results. So lots of people here curious about what this process entails. So I think the majority, the largest proportion there is those who just want to find out more about changing legal structure. But a couple, as we see down the list, are actually considering this or have taken this decision. One saying that they've recently changed their legal structure and one in the process of doing this. Brilliant. So a mix of people in the room today. Okay, so without further ado, I will hand you over to our first speaker today, and that's Aggie Taylor, one of our governance consultants at NCVO.
Wonderful. Thank you so much, Amy. And thank you for answering those polls. It's nice to see a little bit about all of you. To introduce myself, my name is Aggie Taylor and I'm a governance consultant here in NCVO. So I spend my day-to-day doing governance reviews, trustee training, thinking about the Charity Governance Code and what good governance looks like within the sector. I came into governance from being the chair of a national youth charity and use this kind of experience on a trustee board within my day-to-day work. Recently, I've been working with Amy and thinking about the challenge around conversions. So it's really exciting that I'm going to be able to talk to you for the next 20 minutes-ish. I'm going to be introducing charitable status and legal forms, what those forms kind of look like, thinking about why you might be choosing one over the other, and understanding how conversion can deliver different impact for your charitable purposes. So to start you off, on the next slide, I'm just going to introduce charitable status. It's a little bit difficult to talk about converting to a charity or being a charity without recognising the two key tests that make an organisation a charity. So if you're a charity in England and Wales, it doesn't mean you've kind of signed up and said, I want to be a charity, I want to do this. It means you meet these legal tests. The charitable status was first defined in 1601 with the Statute of Charitable Purposes and most recently redefined in 2011. If you're really hot on governance, you might know there's also a 2022 Act, but it didn't change those provisions for charitable purposes, which are really the important thing when you're thinking about that key test. There is a difference between charitable status and charitable structure, and we'll look at charitable structure in a little bit, but charitable status is about these tests. The first test is that to be a charity, you have to have exclusively charitable purposes. This means that the charity must engage with activities that fit within one of the 13 definitions set out in that 2011 Act. A charity can have more than one purpose, but it can't do anything outside of those 13 purposes. And charitable purposes are mostly in line with the relief of something in need. So relief of those in need by reason of age, youth, ill health, disability, financial hardship, or some other kind of identified aspect identified by the Charity Commission. You can also be a charity and have charitable purposes that link to support of the armed forces and advancement of the arts or advancement of education. But when you kind of identify as having charitable purposes, you've got to fit within one of those definitions. You could have more than one. So, for example, if you're a community theatre and you have the purpose of advancing the arts, you put on Shakespeare, you do a really nice community version of Fleabag, but you also have children coming from local youth organisations and schools. You might also have the purpose of advancing education. So you don't have to choose one of these purposes, but you can only do things that link to that purpose. The second key test of being a charity is that you have to advance those purposes for public benefit. This one is a little tricky test, so there's multiple parts to this test. The first is that public part, and it has to be, you have to advance your purposes for either the public at large or a defined sector. For example, young people, people who identify as women. You could have multiple identifiers, such as a characteristic and a geographical region. So you could say, my charity is for people under the age of 18 who identify as men in the London borough of Barnet, and that would be okay. You can't go too small when you're thinking about your public. You couldn't say everyone on the street that I live, or everyone in the odd numbered houses in a certain place. So you wouldn't be able to really realistically be able to enter and exit that public. There's also not a substantial cross-section of the public. So you've got to advance those public purposes for the public. And then there has to be a provable benefit that outweighs any harm. Again, this one is a little bit tricky. For example, in the youth organisation that I sit on the chair of, we take young people out and do outdoor education in fields, and we go camping. It's all very lovely. Children have a great time. We have to be confident that the benefit of those activities for our beneficiaries, those young people, outweighs the impact on the woodland or area of biodiversity that we're in. So it's really tricky because there's no graph that says happiness of children and confidence gained versus amount of bugs squashed. You can't really add those things up. So it's about understanding what our benefit is. It's about thinking about what those harms could be, about having proof that we are producing that benefit for the public good. So those two key tests together make an organisation a charity. If you meet these, you're going to be a charity. If you don't, you can't. Sounds as simple as that. Obviously, in practicalities, makes it a little bit more complicated. The other thing about being able to only do things that are exclusively charitable is it limits how charities can trade. So charities can engage in trading activities that relate to their primary purpose. So that either is part of that primary purpose. So maybe you're charging for the service that you kind of offer as the purpose, or it helps you run your primary purpose. So maybe you're selling something and having a cafe, which means that more people are going to come to whatever you do for your charity purpose. So you're quite limited on how you can trade, and that becomes important when you think about conversions. So we'll catch up a little bit on that in a moment. On the next slide, we're looking at how status is not equal to a specific legal form. So Amy asked you to do a nice poll saying what legal form you are, and some of you put in different types of charity, and that's because to meet those two key legal tests, you could be a number of different organisations. I put the most common four on the screen, split into unincorporated and incorporated forms. So on the left, there are those unincorporated ones with the trust, which is the oldest form of charity, no members, only trustees. And the role of those trustees is normally to look after an asset and use it for the benefit of others. And then we have the charitable unincorporated association, which is the most common form for small charities. It's how lots of organisations begin as a group of people doing a good thing with a little bit of structure attached. quite an informal way to operate. If you're an unincorporated organisation, it means there's no legal entity that exists as that organisation. You exist as a group of people who are running the organisation. And so to formalise and become a legal entity, that is that organisation that can enter into contracts, that can open bank accounts more easily, that can borrow money, all of these kind of things. Then you might incorporate and become either a CLG or a CIO. Originally, the easiest way to do this was to become a CLG, which is also called a charitable company. It's a charitable company limited by guarantee. It means the charity acts in a similar way to a company and can benefit from company law, but it does mean there are dual regulators. Your trustees who run charities are also directors, so they also have to submit returns to Companies House. A few years ago, in 2014, the CIO form was created, which is that charitable incorporated organisation, which allowed charities to have that greater legal structure, so to be a legal entity without having to register for a second regulator. Which is why when we're talking about conversions, we're mostly talking about that charitable unincorporated association to that charitable incorporated organisation, or the CIC to that charitable incorporated organisation. You could convert to a CLG, and it might be worth thinking about if you have lots of branches of your organisation or you're going to work overseas, internationally, as it's a more recognised form internationally, or if you want to be really quick on setting up the banks. But you typically, it's made easier by the Charity Commission to convert to a CIO. So those are the forms of charitable status. We now have on the screen the Community Interest Company, a CIC, which I know quite a lot of you identified as being. Just quickly, to run through what a CIC is. It's a limited company that benefits the community and not stakeholders, regulated by the Community Interest Company Regulator, and with a community interest statement that says how they're going to use the assets for the benefit of the community. There's also an asset lock, which means that they can only use a certain amount of the money, not for benefiting the community, and it can't all go outside. So if you register as a CIC, you only have two options afterwards. You can only stop being a CIC and disband your company, or become a CIO, as you're promising in that asset lock to always use the money and your resources for that community. It might sound a bit similar to a charity, and some of you might be thinking, I don't really understand the difference. And the difference is a CIC doesn't have to have exclusively charitable purposes. It is allowed to pay dividends to investors and have paid directors, whereas those who run charities are volunteers, and you can't have investors as you are not for profit in any way. So CIC can bring in a little bit of social investment. It also is more flexible in engaging with commercial activities. So it's not limited to that primary purpose trading that we talked about in charities. And so trading can be part of the service, and it is easier to do that. They're also allowed to offer more diverse services, as you don't only have to do things for charitable purposes. You might offer community classes in art, but also offer quite a lot of them privately, bring in more money. And you're allowed to do that as a CIC, whereas you might have a lot more restrictions on doing that as a charity. On the next slide quickly then, we have that CIO, which I did run through. It's a type of incorporated charity, and it's the main one that is commonly converted to, either from an unincorporated association, they're incorporated to a CIO to have that legal form, or a CIC might change to a CIO, as it's one of those options that you're allowed to change to if you have an asset lock. It's different from a CIC in that it does have charitable purposes. You are only allowed to do things for the public benefit. You're governed by a governing document that will set out how and why you're allowed to do things, and your regulator would be the Charity Commission, not that CIC regulator. On the next slide, we do have a little bit about those other forms that might create community benefit. There's a charitable company, which, as I mentioned, is that company limited by guarantee. which means that it's not for profit, well, that's a charitable one. You can also have a company limited by guarantee. It's not charitable, but it means that you have those two dual regulators. There's also a community benefit society, which is owned by its members who hold shares and control the society, and might also have an asset log, could also be charitable, but exists primarily for the benefit of a wider community, but is controlled equally by all who are part of it. And then a cooperative society, which provides services for the members rather than the wider community based on cooperative values. So these are different forms that you might have heard of. We're not covering what conversion looks like to them today, as we're thinking about that CIO one. But if when I talked about CICs and CIOs and charities, you thought none of those are for me, it might be worth going and having a little look at some of these other forms. So why might you consider the change? If you're thinking, I know this is a lot of talking, and I think probably also it's one of those things that sounds really difficult when you first start thinking about it, as it's using a lot of acronyms, CIC, CIO, CLG, and also Amy introduced the fact that conversion sneakily is actually starting a new organization, transferring, closing down an organization. It's all overly complicated. But if you're here, you're probably considering some kind of change. So now we're going to think about why you might be considering the change and the impact that it could have on your delivery. So if you're an unincorporated charitable association and you're thinking about incorporating to a CIO, you might be thinking about it because of the liability that you hold as trustees. So trustees run a charity, and it's a legally binding role. And so in operating the charity, it's rare, but trustees could be found liable for entering into contracts that they can't then meet. If there are any issues, statutory issues with safeguarding, health and safety, all of these kind of things, there's greater liability on trustees if there's no legal entity that can enter into the contracts. It means instead those trustees as a group are entering into the contract. So incorporation, moving from unincorporated to incorporated, that conversion to a CIO is a real protection for trustees. It allows you to enter into contracts as a legal company instead. There's also, you can get more grants and funding if you are a CIO. Not technically on paper, there's often grants for charities all over, but in lots of organizations want there to be a bank account that isn't in someone's name. They might want to be able to see certain protections that you can have from being a CIO. There are ways you can get funding while being unincorporated. There are ways that people can host money for you while being unincorporated. But the scope of the grants and funding that you have access to as an incorporated organization are wider, and it's easier to hold pots of money. And also, you might feel more comfortable entering into larger contracts. It also helps with banking. Banking is traditionally very difficult for charities. It's easier to open a bank account with a kind of legally recognized organization. It also reduces the risk of an individual holding lots of money. It means that it's unlikely to mess with individuals' benefits, which might happen if lots of money is constantly coming in to someone's bank account. And it means that you're not holding it in one place. If you're moving from a CIC to a CIO and thinking about that change, you might be thinking about it because of funding and grants. There's lots of funding out there for charities. How you raise your money for charities is often done through grant giving and fundraising. It's limited for CICs. Less organizations want to give out money to organizations that can still do quite a lot of trading. You also, if you have exclusively charitable purposes, if you listen to those key tests and thought, actually, that's me, and we can do that, and you think we don't want to be giving shares out to any social investors, we want to make sure everything is about our beneficiaries. Becoming a CIO means that the whole work is always focused on them. There isn't that, how much money do we want to give to others? If you're not pulling in social investors, it might make sense to be a CIO. And then finally, tax and gift aid, if you're thinking about that CIC to CIO. Charities have tax breaks on that primary purpose trading. They also can claim gift aid on certain spending on them, VAT breaks up to a certain amount, depending how much they're trading. That's something you can gain if you become a charity, but you don't have access to if you're a CIC, as trading is a more integral part, or could be a more integral part of that social enterprise. Finally, we have some of those governance considerations, and these are the questions that you really want to be asking yourselves as a board if you are considering these changes. So the first one is around where power sits in your organisation. I've put it as founder power, as that typically is something that we see when we're thinking about those conversions. Lots of organisations that set up recently still have those who set them up in positions of power as directors. If you're a CIC, a director can take a wage and so work for the organisation and have kind of control of the organisation. If you become a charity, those with the control of the organisation, those trustees, is an unpaid position, a voluntary position, and you need a trustee board that doesn't include just people who are related to each other or people with kind of entanglements and conflicts of interest to the organisation. So where power sits in your organisation could really change if you are changing form, and you want to look at those roles and responsibilities of a trustee and see if that's something you could meet and you'd be able to kind of transfer that power together. You also want to be thinking about those impacts for your beneficiaries. With the CIC, if you don't have exclusively charitable purposes at the moment, becoming a charity might mean some people who typically use your organisation are excluded in that move, as you now need to be meeting the relief or the advancement of something as set out in their charitable purposes. You want to think about how your benefit will be impacted by moving from community benefit to public benefit and what that actually looks like. The third consideration, which I think is really key and sometimes forgotten, is the amount of time and energy it takes to change. You need to be able to look around the room and say, okay, we're all able to put in for this. Everyone's willing, everyone has the time to kind of do this, setting up a new organisation, that transferring of assets, that closing down. It might involve quite a lot of talking to the Charity Commission, to the other regulators. You need to be ready that it's not one person who's going to be doing all this. You probably don't want to be doing it when you're in a period of kind of huge delivery for your organisation. You'll be thinking, can we meet business as usual and do this change? What cutbacks might we want to make? How can we ensure there isn't burnout in thinking about this? And then the final consideration before I hand over is thinking about that difference that comes with having charitable status. This is mainly for those considering CIC to CIO, but there is a lot of trust in charities. Having charitable status comes with a lot of scrutiny, both from regulators, but also from the public. And this is important because being a charity, you get certain benefits from being a charity. And the public who give money want to make sure that you're spending it well, that you're acting ethically, that you're being open and transparent. But you need to be ready and ensure that you're ready not only to meet that scrutiny, but you also hold that responsibility that all trustees communally do for ensuring that charities act well to keep public trust in charities in general. So that's another kind of key governance consideration when you're thinking about that change. I would recommend you need to set considerable time aside to look at these four considerations and any others that are unique to you, potentially in an away day or in a large session. It's not going to be something you decide in half an hour. But it is something you need to be thinking about before you kind of really go for that change. There's a lot of information from me, so thank you for listening. I hope it wasn't too confusing with all the acronyms. I'm now going to pass over to Phil, who's a partner at Withers, to talk about those practical and legal considerations.
Thanks, Aggie. Lots of very interesting and useful stuff there. I'm going to dive more into the legal side of things. As you might expect, I'm a charity lawyer, so I advise charities predominantly. That's most of my working life. And very often that does touch on thinking about different types of legal structure and equally different types of good undertakings and enterprises, if you like, so charities or community interest companies or not-for-profit companies, whatever it might be. So I'll look first at if you want to become a charity, if you're already a community interest company, which I'll call KICS because I find it easy to say. Then I'll think about a couple of options where you might be changing the structure of your charity that is already a charity in one form or another. So going from unincorporated to incorporated, and then going from a charitable company limited by guarantee, typically, and I know we've got a few of those in the room, to a CIO. So if we go on to the first of my slides, thinking about the kick to CIO conversion, I'll preface this by just drawing out two different types of conversion that are possible. So the first is where you set up an entirely separate thing alongside your existing entity. You transfer everything that you're doing, your assets, your undertaking, your staff, your buildings, your money, whatever's there, into that new entity, and you close down your old entity. So that's, we commonly would still call that converting your structure, changing your structure, but actually it is setting up something new, moving everything across. The law does provide some other options which are more direct conversions. So the converting from a CIC or kick to CIO is one of these. So you can actually flip the status of your existing legal entity, your existing structure, and turn it into something else with a bit of legal magic. This is reasonably straightforward to do. Whether you want to do it, why you'd want to do it, Aggie's gone through quite a few of those considerations, but I mean, the fundamental points are that a kick is not and cannot be a charity. It exists for the benefit of the community, as Aggie was saying. It has some more freedoms in the way that it can operate. The kind of legal tests or the legal hurdles that it has to clear are lower, and it has a much lighter weight kind of regulation through the kick regulator than charities in England and Wales have through the Charity Commission. On the other hand, as Aggie said, a kick doesn't really access any of the tax benefits, which are a lot of the upside of charitable status. And equally, it's not quite such a good wrapper for presenting to the world. You know, registered charity, everybody understands what that is. It has some cachet. It will allow you to speak to funders in a particular way, and equally to third parties who you might want to work with. A kick, slightly less well understood, probably still, certainly less well understood internationally, if you're thinking about doing anything overseas. In that context, what's the process if you think, well, we've got a kick, but actually our work's charitable, and we think it would be helpful for us to have this charity wrapper that we could present to the world. We think it would be helpful for us to have the beneficial tax treatment, so exemption from corporation tax, mandatory business rates relief, things like this. So let's convert. And as Aggie said, you want to take the time to think about that properly, think through the implications, what the rate changes are really going to mean for you. But if you get to the point where you've decided actually this would be essentially in our organisation's best interest to do, well, how do we do it? Fairly straightforward. So it's a special resolution. There are two that you have to pass. So the first is actually to do the conversion. So we've decided that we want to change from a kick to a CIO, pass a resolution to do that. The second part of the resolution is to adopt a new CIO constitution. The resolution's passed by the members. So you'll probably know, if you are a kick, that you have a two-tier governance structure. So as with all, if you think of a normal commercial company, you'll have a board of directors and then a group of shareholders who own the company. Typically with a kick, you can get kicks limited by shares, but let's stick with a limited by guarantee model for now. You'll have a group of members who are sort of the owners, and then you'll also have a group of directors who run the kick day to day. The resolutions to convert are members' resolutions, so special resolution. In this case, that needs to be passed by a 75% majority if it's at a meeting. But if you're passing the resolution in writing, it needs to be unanimous. So it's quite a high majority threshold. So that's to convert. It's quite short form. You need to get the form of words right, but it's essentially saying we're a kick, we want to be a CIO. And as I say, to adopt the constitution. For CIOs, the Charity Commission likes you to use its model constitution. So that's what's going to replace what would have been the Articles of Association for the kick. So a constitution will be your main governing document going forward. So it will say who the members are, it will say who the trustees are, which will now be the people who were formerly your directors in your KIC structure. It will set out how each of those groups conducts their business, how they're appointed, what their powers are, and equally the purposes of the CIO itself, so the charitable objects that it's required to further. So the Commission likes you to use the model constitution, and it says this needs, you can tweak it a bit, but we really don't want you to do very much. So we'd like you to just put in your name and your purposes and not very much more, thank you. You can go a little bit further than that, but if you want to depart from the constitution very significantly at all, you really will need to explain to the Commission why that would be in the best interest of your CAO to do. And it can be somewhere where it's helpful to have some advice. So you prepare that constitution. You then need to apply to the Charity Commission to be registered as a CIO. A CIO can't exist outside the Register of Charities. So it can only really come into existence. This can all only become effective once the Commission has reviewed your registration application and said, yes, we're putting you on the Register of Charities, here's your charity number. Behind the scenes, the Charity Commission will then have a word with Companies House and say to them, by the way, this has happened, so you can stop regulating that legal entity as a KIC. It's now a CIO, we're taking over, thank you very much. It's one of these areas where bits of government actually talk to each other, which is quite helpful and not always what happens. So you've gone through that conversion, you've turned your KIC into a CIO, and as I say, this is one of those rare occasions where actually there's no change of legal entity. So far as the law is concerned, your KIC has just transmuted into something else, a different kind of legal structure, but it is the same entity. And that means all of the assets that you held as a KIC, as well as all of the liabilities that you were subject to as a KIC, track automatically across into the CIO. Your bank accounts will stay, your staff will remain employed by you, any ongoing rights that you have will all stay in place. You will have a slightly different name, but it may be that the only change is the suffix. So the KIC that you have at the end of your name currently will perhaps just become CIO. That's the usual change. So there might be a little bit of communication that you have to do with people like your bank, any significant third parties, just to explain that this change has happened. And you'll then become subject to all of the charity law requirements, some of which Aggie has touched on in her session. If we go to the next slide, I'll think about changing structures of an existing charity, as I mentioned, and this is quite a different process, at least in the first example I'm going to look at. So this is where you have a charitable trust or an unincorporated association. I know we've got some of those in the room from the initial poll. You decide that you want to change your structure so that you are incorporated. As Aggie mentioned, one of the big advantages that people think about when they're making this sort of change is the greater degree of protection that this provides for your trustees, essentially. So a trust or an unincorporated association doesn't have any legal personality. It doesn't exist otherwise, essentially, than as a form of agreement between the trustees who set it up. So far as any liabilities go, the starting point is that liabilities are incurred in the trustees' own names as individuals. The trustees are entitled to an indemnity out of the charity's assets. So they are entering into arrangements in their capacity as trustees. So the assets of the charity are in principle available to meet liabilities that are incurred. But what if there aren't enough assets? That's the kind of main question you have to think about if you're a trustee of something unincorporated. And equally, where things are getting complicated, do you really want to carry on with an unincorporated structure? So if you're taking on premises, if you're taking on a bunch of staff, if you're starting to think about doing more complex operational work that involves vulnerable beneficiaries, where there could be things like, health and safety claims, whatever else it might be, would you prefer to have, well, A, the protection that a corporate structure might offer you, but B, the administrative simplicity that it might offer you? So thinking about staff, your employee contracts, when you're unincorporated, all of those people are your own employees personally. So it will be your names as trustees as the employer. Once you've incorporated, it will be the company or the CIO that's the employer. So there can be lots of good reasons to think about moving. I could talk about those for the rest of the afternoon, but we can pick them up in questions if people are interested. But let's think about the process. So we want to incorporate an unincorporated charity. That's the usual terminology, but you don't actually incorporate it in the sense that you make any change to that structure. This is one of those where, as I was saying earlier, you set up a new entity alongside your existing unincorporated charity, and you transfer the undertaking across. You don't want to do that before you've registered your new entity. So if you're incorporating as a CCLG, a charitable company limited by guarantee, you'd incorporate that at Companies House. You'd then register it with the Charity Commission, and you'd then register it with HMRC, which is what unlocks all of the beneficial tax treatment that we've been touching on. If you're doing a CIO, you draft your constitution, put in your registration application. The CIO springs into existence once registered with the Charity Commission, and then you do the HMRC registration after that. Once you've done all of that, you've kind of got your tax treatment locked down. Then's the time to move across any valuable assets. You don't want to accidentally fall into a gap where you're transferring something out of a nice, properly registered charity into something that's not quite registered, and there may be tax gaps that you fall into in this sort of thing. How do you transfer the undertaking? Well, typically in a short form transfer agreement or deed that essentially scoops up all of the existing assets and liabilities and moves them across. So that's signed on the one hand by the trustees of the unincorporated charity, and on the other hand, on behalf of the charitable company or CIO, and that gives effect to the transfer. There are some little wrinkles to think about, and in some circumstances, you might need a Charity Commission order to make that transfer. So, for example, if there's any land within your existing unincorporated charity, and technically speaking, that's going to be transferred to a connected party, your new corporate structure probably is a connected party if it has the same trustees. You can only do a transfer to a connected party with an order from the Charity Commission. So you might just need to obtain that. Equally, if you are moving substantial non-cash assets like land, then you'll have to probably go through a formal company law process if you're moving into a charitable company called the substantial property transaction regime, which is just going to need a bit more in the way of authorising resolutions and, again, a Charity Commission order. The Commission might also authorise conflicts. So if you have identical trustees in your unincorporated charity and your new corporate charity, strictly speaking, they have, on the one hand, duties to the existing charity, and on the other hand, duties to the new charity. And you might say, well, it's clearly aligned. There's not really a conflict. But in practice, the Commission would typically consider there to be a technical conflict that needs to be authorised. So you can get around that by having independent trustees or by obtaining an order. So again, those areas are kind of fiddly bits. I wouldn't, unless you're quite familiar with this, I wouldn't necessarily expect you to kind of grasp all of the implications in connection with that straight away. But it's just to be aware of, if you are doing this sort of incorporation, there might be circumstances that mean you need to get an order. So, you know, it could be that you want to get advice just to make sure you're covered off. I'll just touch on liabilities as well, because we've talked about one of the drivers for this sort of process being protecting trustees from personal liability. If we just think about the incorporation process, so you've got trustees of an unincorporated charity essentially giving away all of the assets out to, all of the value out of that charity is disappearing and going into a new charity. What if some liability, some historic liability crops up in connection with what you as a trustee of the unincorporated charity did 10 years ago? As I say, ordinarily the position is that you're indemnified out of the assets of your charity, provided that you've acted in accordance with your duties. What if you've given away all the assets when that historic liability crops up? Are you exposed? Possibly, yes. So for that reason, you'd usually include an indemnity in the transfer agreement, whereby the new corporate charity will indemnify the outgoing trustees of the old charity. Again, provided that any liabilities have been incurred in accordance with their duties at the time. So you cover that off. Once you've done the transfer, your new registration's all in place, you can remove your old unincorporated charity from the register. So that will fall away. You'll just have your one new registered charity number. You can add this transaction to the register of mergers at the Commission as well. Technically, this is a charity merger, even though obviously we're not really thinking of it as a merger, we're just thinking of it as a change of structure. The advantage of putting it on the register of mergers is that the new charity would essentially continue to receive any legacy income that the old charity would have been entitled to. You don't want that to fall into a crack. So the register of mergers makes sure that it tracks across nicely. Clearly, from what I've been saying, what we're talking about here is a different entity. So going back to the questions that we were looking at with the KIC to CIO conversion, your assets have moved here. Your bank accounts won't move automatically because this is a different entity. You might need to close and reopen. That would be something to talk about with your bank. Your staff will probably transfer under 2P if you have any. So just be aware that there would be a transfer that was going on in this case, in the way that there wasn't in the last model. So that's unincorporated to incorporated charities. The other kind of change of charity structure we're going to talk about just briefly on the next slide is moving from a charitable company to a CIO. So again, as Aggie mentioned, charitable companies are great. You know, they provide all of this greater level of protection from personal liability. They're quite a familiar structure, particularly if you're doing things overseas. But equally, they kind of present quite well. Company law is all very certain and well known. Companies have been around for a long time. So people like me quite like companies because you think, well, you've got a legal question, we can always find the answer in company law. But equally, companies aren't as straightforward to administer as CIOs because you have that dual registration that Aggie mentioned. So you're regulated by Companies House and the Charity Commission. And one of the moves in company law at the moment is for Companies House to become a much more active regulator. It's been granted a lot more powers very recently in the Economic Crime and Corporate Transparency Act. So you're actually looking at two reasonably active regulators. In the past, you used to think, well, Companies House is they just hold the register, they don't do much else, but they're starting to do a bit more. So that's something that you might take and bear in mind. and think, well, maybe a CIO is going to be better because then Companies House will fall away for us. We'll just have to deal with the commission. So you can go through that process. There is, and again, this is one of those magic conversions where you can just flip a charitable company into a CIO. You don't have to go through all that complex transfer of undertaking exercise that I was talking about on the last slide. So it's pretty similar to the conversion process for a KIC to a CIO, which is helpful. You know, it's passing those two resolutions. So first to convert, and again, that's a special resolution, but remember it's the unanimous threshold if you pass that resolution in writing, and also to adopt a new constitution that will replace your old articles. You're already registered with the Charity Commission, so you don't have to do a new registration application, but you do have to apply to the Commission through a special online portal that they want you to use for this particular kind of conversion. They don't like, the Commission that is, don't like charities tinkering with things as part of this exercise. So if you think when we do this change, we also want to roll up a load of amendments to our objects, our trustee benefits provisions, the bit that says what happens to our assets on dissolution, all of those are regulated amendments, meaning that they need consent. The Commission likes you to deal with those first, get them out of the way while you're still a charitable company, and then put in your conversion application to become a CIO. So yeah, fairly straightforward. Charity number stays the same, assets stay where they are, you're the same legal entity. Again, as with the KIC to CIO, you might want to have a conversation with third parties, just so they understand what's happened, you know, your key stakeholders, maybe your bank, other counterparties. One kind of point to be aware of here, I don't know if any of you are from exempt charities, so charities that aren't required to be registered with the Charity Commission. There's quite a number of different sorts of exempt charities out there. Academy trusts, for example, are exempt charities, so they're regulated by the DFE rather than by the Charity Commission for most purposes. Equally, registered societies, so cooperative and community benefit societies, if those are charitable, they're exempt from registration with the Charity Commission. All of this conversion process is only available to registered charities, so those of you that have registered with the Commission or that have a charity number. In theory, the charitable, cooperative and community benefit societies are able to do this conversion, but currently they're still exempt. So they would need to become not exempt charities, registerable charities, before they could actually do this conversion. I don't think from the poll that we had any societies in the room, but if we do, and anybody wants to talk about this, then of course we can do that. That's what I was going to say about converting. Hopefully that was helpful, not too technical or dry. I'll hand back to Amy.
Thank you both. Thanks, Aggie and Phil. So much information to take in there, but loads of really helpful stuff. And we've started getting lots of questions in already, which I will do my best to kind of bring together. We've got plenty of time for questions there. And actually, we seem to have quite a few CLGs in the room with us today. That's Company Limited by Guarantee. And before I get into the questions, I was just going to ask Phil potentially just to clarify this, because you mentioned it there in your slide, but not just any type of company limited by guarantee can convert to a CIO, right, Phil? Can you clarify that for me?
Yeah, that's right. So only registered charitable companies limited by guarantee can go through this process. If you are another sort of company that's not charitable, you might possibly be able to amend your articles so that you're a charitable company limited by guarantee, then register with the Commission, then convert to a CIO if you want to, or you might just stay as a CLG. But most kind of commercial companies wouldn't be able to do that because they would be companies limited by shares with a bunch of kind of shareholders who are expecting a dividend, you can have a charitable company limited by shares, but there are no dividends, and that's a kind of niche that we probably don't need to get into. But for the conversion process I was talking about, yeah, it's registered charitable CLGs only.
Thanks, Phil. And on that same note, would a community interest company limited by shares, which is rare, but it occurs, be able to convert to a CIO?
Potentially, yes. Yeah. But it's one of those areas where you could do it in theory, but it's where the commission kind of gets a bit confused by share companies generally. So you might not find it as straightforward.
Okay, thank you. Right, having a look at this Q&A then, as I said, lots of questions from CLGs. I guess the big overarching question, which both of you might be able to come in on, is somebody's put it very nicely here. CLG to CIO, is it worth the faff? I suppose if we talk about what would be the pros and cons of this, or what would be a reason for a charitable company limited by guarantee to convert to a CIO?
Yeah.
If we can put it succinctly.
Shall I start, and you might have thoughts as well, Aggie? But so a charitable CLG and a CIO are very similar things. It's true. So they both provide the kind of limited liability status. So that's where the members are only exposed to the extent of a nominal guarantee of £1 or something. They also have this separate legal personality that we were both talking about, which means that the entity itself incurs liabilities, not the individual trustees as people. So the fundamental protection is the same, and equally the administrative ease of employees being in the entity's name, things like this, that both the same for a CLG and a CIO. The tax treatment's the same as well. So the charity tax benefits that you get for being a registered charity, they go equally along with a CLG or a CIO. So the main difference is that dual registration, which generally is a disadvantage. So there aren't really many circumstances in which you think, yes, we're also registered by Companies House. That's great, because I can't think of any reasons. In terms of their kind of scrutiny and oversight. The one case where people sometimes say, well, we're kind of going to stick with the company, we prefer that, is because banks can sometimes find CLGs a bit more familiar. So particularly if you're going to do any significant bank borrowing rather, then that might be easier with the CLG. And that's chiefly because Companies House provides an online register of charges. So banks like that. They like knowing that if they lend you money and you're providing a charge in connection with that, so you're mortgaging your property, then you kind of that gets told to the world through Companies House. So they sometimes prefer that. And equally, as I was saying, sometimes if you're doing a lot of work overseas, then people overseas might be more familiar with what a company is than with what a CIO is. So it might make things a little bit more straightforward for you. If none of that's important, then CIO conversion might be helpful for you, because, as I said, it's fairly straightforward, and you'd be shedding all of the double filings and the double registration issues that you have with Companies House and the Commission. So is it worth the faff? Well, it depends. Is it for you, I guess?
Nice. Just to come in on that one, especially on that kind of worth the faff. I think what Phil said is absolutely right. That kind of there isn't a lot of difference. It's more that CIO is quite a lot newer, which is why organizations, lots of older organizations tend to be CLGs. When I do governance reviews, we look at things like the structure of the organization. If an organization is unincorporated, we might often make, if appropriate, a recommendation to convert to a CIO. We don't often make the recommendation to convert from a CLG to CIO, unless it's a significant difficulty year on year to send in those accounts and returns to Companies House. Often that's kind of just how you then do things. So then the change might be a much bigger piece of work, we find, than continuing your kind of business as normal. So I think definitely if you're here and you're on that stage, you've probably had some conversations, you think actually maybe it is significant enough to make that change. But I think it's got to be something you have a look at. Is it worth a faff? Personally, I think I would lean towards probably not, unless it's quite significantly within your every year when you're sending in towards your charity, towards the Companies House. That's a significant piece of work for your staff, for your volunteers, and it'll be a lot easier if you do go through those steps that Phil put out. But as Phil said, not a huge amount of difference in them in terms of the benefits for you. There is just that some of those cons in that you have dual regulators.
Great, thank you both. And just to pick up on that, I will come in on some further questions around that process of CLG to CIO. And I think some concerns people have are around the timing of the conversion and the impact it will have on annual accounts. And there's a similar question also around, it goes into more detail, but their reporting year is January to December. If we applied now, September, would it be ready for January in your experience? So kind of how quickly do Companies House and Charity Commission talk to each other, and what considerations are there in terms of timing and annual accounts?
Yeah, well, I mean, I don't think the accounting year should get in the way. So, but you're right to think about it, certainly. I mean, what should happen is that the Commission tells Companies House that this has occurred. You file accounts following, assuming you file following the registration having occurred. Then you'd be filing accounts referring to yourself as a CIO, but they would acknowledge in the annual report part that you were a CLG for the first part of the accounting period. But actually, the accounting standard that you'd be using would be the charity SORP in both cases. So the accounts themselves should look, pretty much the same. It's just that there would be an acknowledgement of the change of status, because you'll know in the first part of an annual report, there's always the description of the nature of your legal entity. If you're a charitable company, the directors are also trustees. There's kind of this description at the beginning. If it might be a bit annoying if you are kind of going through this exercise, but actually it's not fully complete by the time you have to file your accounts with Companies House, and then you'd be having to put them in as company accounts for that period. You'd probably still refer in the next set that you filed with the Commission to the conversion having taken place, just so there's a clear record on the public register, albeit only then at the Commission, of what had happened.
There's a similar question also around CIC to CIO, and that they had an issue with submitting their end of year accounts to Companies House, which caused issues when completing funding applications. So in terms of the best time to start making moves on this sort of conversion, is it the start of the accounting year?
Perhaps, yeah, if you have encountered issues like that. I don't know what exactly the issues were, but it may have been just having to go through an exercise of explaining to the funders what had gone on, because most funders won't be familiar with this sort of change, you know, that you can just be a company or a kick and then not be a company the next day, but actually still be the same legal entity. You know, that's counterintuitive, and a lot of funders would probably think, has this really happened? Can that happen? Do we want to fund this person? So there's probably an exercise in putting together a very clear explanation, you know, with reference to the relevant bits of law that a funder can look at and get comfortable with. And that would also go to explaining any kind of wrinkles that you might have had with your accounts and where they were going to appear going forward. You know, which register you were going to steer a funder to, and pointing out that actually that's going to change. So yeah, in principle, if there's a really chunky funding round that you're going for, in an ideal world, that would happen when you were squarely on one side or the other of the process. But you're obviously not always in control of when funders are thinking about taking in applications.
I think we'd always advocate for reaching out to funders and having a conversation.
Yeah.
They are just people as well, and explaining things. I guess on that note, and this is a question for both of you, if we're thinking about communicating these sorts of changes to funders, are there any other key people that you should be thinking about communicating this to? I guess externally.
Do you want to speak to that, Aggie? I've been talking a lot.
Yeah. Yeah, I think if you're in any kind of partnerships, it would be good to be thinking about letting them know if there are changes in kind of, if it might be a little kind of like blip in like what that looks like. But also if you're in a partnership that has a contract with your old organization, you need to make sure that's updated and also check that those terms are going to continue and all these kind of things. So similar to funding, when you're in any kind of contract, you want to be letting individuals know. I think that should also be similar if you've entered into agreements for renting space or various things like that, making sure that actually the change in your organization type, well, you might keep the same name, we might slightly change the same name. I think it's for CIC, you need to have CIC after it. You'd obviously lose that if you became a CIO. So the organization that enters into these contracts would be different. So it'd be good to let all of those individuals know that you're thinking about or going through that change. You don't need to ask them for permission or anything, but a kind of polite, this is what's happening, this is what the change would be. Do we need to talk about any of these kind of contracts we're in? In terms of if you kind of work in a community, if you have stakeholders, if you have people who come a lot, again, I think it would be good to have all these people informed of these changes, especially if it changes slightly your delivery within that space. And that's about being, if you're a charity, being open and transparent in the work that you're doing. And while it might not be, lots of people might read it and think, oh, you're changing structure or whatever, that doesn't really affect me. It's the kind of thing that you'd put in your annual return. And it's nice to keep those who interact in your organization up to date and aware. But I'd say the contracts are the really big ones, and then everyone else you're informing if there are any changes, especially that affect them.
Yeah, I think it changed to charitable status. So if you're doing kick to CIO, there can be an opportunity in that, you know, to tell a really good story about your kind of developing as an organization. You're now a charity. You know, there's a lot to be said for using that as an opportunity to tell a really positive story about your work, your mission, your organization.
And I suppose just to add to that list, which you covered a little bit in your section, Phil, is around speaking to your bank potentially around any changes. And we've had a question actually, which I think you did cover, but just to clarify again, can you keep the same bank account if you're going from a kick to a CIO? As you said, it's the same entity.
In principle, you can, because it's the same entity, but yeah, it's worth talking to your bank. And I mean, a lot of you will probably have seen press over the last couple of years, and the Charity Commission rowing in as well about, well, and then CVO commenting extensively about the difficulty of obtaining charity bank accounts. So conceivably, some banks would say, well, we were quite happy to support you when you were a KIC, but we have to go through a whole new process now that you're a charity. So it's worth having that conversation with them sooner rather than later, just in case they do have any issues like this. And you have to think about a different provider, because, on the face of it, as I say, the account, everything else just tracks through because your contracts are not interrupted, your arrangements aren't interrupted, you're the same entity. But the practical implications can sometimes be a little bit different.
Just have that conversation.
Yeah, totally.
Bank as soon as you can. Okay. A great question here from an infrastructure organisation who are supporting lots of charities. We're increasingly seeing organisations that are set up as limited by guarantee, so company limited by guarantee, but without an asset lock.
Yeah.
Why would this happen, as this impacts on their ability to apply for funding? Has anyone got any
Yeah,
thoughts?
so you do have just not-for-profit companies. So not KICs, not charities, but just a kind of a different structure, which typically is as you say in the question, a company limited by guarantee. So it will have members and it will have prohibitions on, well, there won't be a dividend because they won't have any shareholders, but equally there'll be prohibitions on any distribution of surplus or profit to the members and potentially also to the directors. So and there will probably also be some sort of requirement that the company operates for some sort of defined social good. It won't be quite that. It would be a charitable mission or set of objects, but there's probably some sort of purpose built in. I think over the last, well, since KICs came in, most people thinking about setting up a non-charitable, not-for-profit entity will have gone with a KIC, just because they're kind of gaining traction. People quite like them. There is the possibility, as Aggie mentioned, of a capped dividend using a KIC limited by shares. So there's a bit more flexibility, but the kind of slightly more old school not-for-profit company does still exist. And I agree, sometimes if you have that structure, you're going to be a lot less attractive to people looking for funding. People do use those sorts of companies for structures that aren't going for funding. So private members clubs, for example, some of the older ones are set up as not-for-profit companies because they weren't really intended to be businesses. They were just intended to be set up for the benefit of the members. It's clearly not charitable, but equally they wouldn't be looking for funding from elsewhere. That it would be paid for by membership subscriptions. So you sometimes see not-for-profit CLGs in that space, but clearly not charitable, not KICs, but it's just what works for them.
Thank you. I will just move on, try and run through a couple of quick questions. There's a couple of slightly more sticky questions here, which we might have to try and get an answer to afterwards, and we'll send out some kind of FAQs to everybody. But I'll just pick up, if we can try and answer these as briefly as possible to get some answers. So we are supporting an unincorporated association to become a CIO, but they have staff and property. Any additional steps to consider here?
Yes, well, I mean, so on the property, you'll need to think about whether the CIO that you're setting up is a connected party. So then because a disposal by a charity of property is regulated, so you need to go through the Part 7 requirements in the Charities Act. If it's to a connected party, then you need that Charity Commission order that I mentioned. And you'll also need to think about how you're managing conflicts. So if if all of your trustees on both sides of that transaction are the same, again, you might need an order. If there's an indemnity in favour of the outgoing trustees of the unincorporated charity, as I mentioned, the commission, depending on the terms of the indemnity, sometimes considers that to be a trustee benefit. So it might be that needs to be authorised by way of an order. On the employees, you'll probably have a 2p transfer. So you'll need to be thinking about making sure that you follow the requirements in the transfer of undertakings, protection of employment 2p legislation, and that you're providing whatever notice you need to in connection with that. I'm not an employment lawyer, so I won't go any further than that. But you would need to be kind of engaging with 2p.
Thanks, Bill. And I would say that NCVO members can get access to our trusted suppliers in HR for some free professional advice there if you want to join NCVO. There are a couple of more specific questions around kind of transfer of assets where it gets a little bit more complicated. I think, would you probably suggest seeking legal advice in these circumstances when they've got land, permanent endowment, those sorts of things to consider?
Yeah, if you've got kind of tricky asset classes, so permanent endowment is going to stay within its existing trusts. So there you're going to be appointing the new corporate charity as trustee of that trust property. So it's not quite the same as just moving it across wholesale to become corporate property. So it's a little bit more fiddly. And yeah, I mean, totally. In all of these kinds of spaces, I would be suggesting, obviously, I would say it, but it's going to probably be helpful to take some legal advice.
Yeah, and I know there's some quite kind of specific questions on this in the Q&A, which I'm not going to get into now, but I will pick up on afterwards to make sure we either get an answer or signpost effectively there. Okay, I know that CIOs tend to be able to access grants more easily, but is it a myth that CIC should get at least 51% of their income from trading? Does anyone know about this?
No, I think I don't think there is any such requirement. I'm not sure where that's come from, 51% from trading. I mean, it will all depend on what business, because essentially KICs are operating a business typically, what business they're set up to do. So there's quite a low bar for being set up with community benefit purposes that mean you're allowed to be a KIC. It just has to be a reasonable person on the street would say what you're doing is for the benefit of the community. So it's objective, a reasonable person. It's not just any person you might find, but it is a kind of low bar, certainly when you're comparing it to what a charity has to do. And then there's the asset lock. There are things like this, but the actual work that you're carrying out as a KIC for the benefit of the community, so in furtherance of that community benefit purpose, is kind of up to you. It's definitely less easy to get funding as a KIC than as a charity, because a lot of people will only fund charities. But the 51% trading is, no, I haven't come across that.
And this question, I'm not sure who it's directed at. I wonder if we could give a quick answer. Could you expand on the tax gap comment going from charitable trust to CIO? Does that?
Yeah, so
you talked about, Phil.
Yeah, all I mean there is so let's forget conversion for a moment. But if we're setting up a new charity, so we incorporate it at Companies House, we then, once it's set up, we put in our registration application to the Commission. Only after we've registered it with the Commission and opened a bank account can we register with HMRC. And it's that registration with HMRC that unlocks the beneficial tax treatment. In theory, HMRC will backdate the effect of the beneficial tax treatment all the way to the day that you incorporated your charitable company. So before any of those registrations took place. It doesn't have to do that. And it won't necessarily do that. It might pick another date if, let's say, the Charity Commission wanted you to make some changes to your Articles of Association before it agreed to register you as a charity. HMRC might only backdate to the point of those changes. So if you've put in a load of valuable assets on the understanding that you're making effectively a charitable disposal from one charity into another, but actually HMRC says that for tax purposes, in the time in which you made that transfer, you weren't a charity for tax purposes, you might have a problem. There might be the gap. That's what I was talking about as the gap. So ordinarily, you'd want to make sure, just to be completely safe, that you've got your Charity Commission and HMRC registrations for your new entity completely in the bag before you move over a load of valuable assets and undertaking into the new entity. So that was the point.
Thanks, Phil. I'm just going to pick up on one final point. I'm aware that we're running out of time, but I think Aggie might be able to come in on this. From somebody who's joined the webinar, they thought they were an unincorporated charity, but now not so sure. Looked at our very old constitution written 40 years ago. We're simply referred to as an association. Does that mean we are incorporated or unincorporated? If we can think about this in the general sense, Aggie, how can people know what their structure is if it's really not clear? And this is the case, I think, for a lot of old organizations, right?
Yeah, so it should say, if first point where you went to, so going to your governing document is the first place you should be going to. Hopefully, it'll say something like CIO at the top, and you're like, amazing, that's what it is. It sounds like in your case, you're a charitable unincorporated association. So you can kind of see that match up. Even if it just says the word association, you can say that you're an unincorporated one. The other things to look for in those charitable documents is if you have a company number. If you do, it means you're going to be a CLG. So it might say that you're a charitable organization. Then if you've got that company number, you're registered with Company House. That should also be on your website if you have it, so easily to find. Most of it should be in your title, whether that's trust, association, a charitable company is often the CLG one, or a CIO will put charitable incorporated associate organization. But it is really, really confusing. If you aren't sure, the easiest way to kind of have a look is look at those keywords, then go back to the Charity Commission's website, do a little bit of Googling, find out where your keywords are popping up. If you Google, if you do association and then Charity Commission, what pops up is talking about unincorporated organizations. Most likely you're going to fit there. If you still are really unsure, that's when you'd go and probably get advice to say, check out my constitution. I think with this, can you get that confirmation?
Thanks, Aggie. Right, next slide, please. And we will just, while we've still got you, we're going to do a quick snap poll to find out what you thought of this webinar. If we could get that up, please, Chanel. Really appreciate people filling this in. I know we're nearly done with this, but this really helps us to plan for our webinars going forward and make sure we keep improving and meeting the needs of the sector. So there are 2 questions there. How satisfied are you, and have you learned something today that you will use in your organization? Just a couple more seconds for people to participate there. Okay, fantastic. If we've got some, great to see everybody's pleased with the webinar today, and got some nice comments coming in through the chat as well. So when you leave this webinar as well, when we end this, there will be a slightly longer, talking 5 minutes, survey for you to fill in, which we would really appreciate if you took the time to do that. Again, we really do take your feedback into account when we plan these webinars. Just my final slide, please. Oh, I think I have 2 more actually. So just a few links here, which we will also outline in the follow-up email next week of some really important guidance that you should pay attention to when considering these things. So we've got the charity acquisition guidance. That's for existing charities, as Phil kind of covered on changing your charity structure. There's some guidance there on converting from a CIC to a CIO. We have something called the charity setup tool, because as we talked about, when you're changing your charity structure, you are essentially setting up a new charity. So there are steps here to follow, as well as our guidance on setting up and closing. And we do also have lots of useful governance training, which Aggie sometimes delivers as well at NCVO on your roles and responsibilities as charity trustees, which might be especially helpful if you have converted, for example, from a CIC to a CIO, and you're thinking about what this means for you as a board. And just my final slide, please. So just time for me to say a huge thank you to those of you who've joined us today, to my colleagues Chanel and Kate for helping us to run this smoothly, and a huge thank you to Phil and Aggie for delivering such interesting and useful presentations for us today. We really appreciate it. If you have not joined NCVO already and you're interested in finding out more, there's a QR code there on the screen, which you can scan with your phone, and it will take you to the right website. Remember, it's free if your income is under £30,000. All that's left to say is enjoy the rest of your day and look out for a follow-up email next week. I'm aware that we didn't get to all of the questions, so we will try and get those answers to you in the follow-up next week. Enjoy the bank holiday. All right, thanks everybody.